Yo, what's going on YouTube? Welcome to Play by Play on Take Your Profit. I go over every trade like it's a game film. We break down the setup, the trigger, the risk, and the execution. Win or lose, we still got to go over it to make sure that we can get better. My name is Ayo. I've been trading options for about 5 years now. I do both day trading and swing trading. And my principle of trading is based on price action and also on STRAT principle. If you are new to options trading, you're looking to learn, I'm going to link a few traders in the description below. Please go check out their work and make sure that you support them. Also, if you like my trading style, please consider liking, sharing, and subscribing. The goal over here is to grow and, of course, at the end of the day, to help you and to help other people that is out there. All right, let's go to the tape of today to look at the two trades that I took. My first trade was on PLTR and the second was on Microsoft. Let's look at the setup, the way we came into the market today. As you can see, the market was in somewhat of a downtrend. We have about 3 red days. Then we bounced, I believe, on Friday. We had an inside day. We bounced on Monday. And Tuesday, we have something that in the STRAT principle, we consider it an inside day. An inside day is a day that does not break the high or the low of the previous candle. And the way you set up to play an inside day on the day that you want to execute, which is going to be today, which is the next day. Today is February 10, 2026, is you want to see a break of either the high or the low. On normal circumstance, if we don't break out of that range, I try not to trade. But the more advanced you get, the more experience you get. There are ways around trading an inside day, like reducing your size, just being aware of the circumstance that you are trading on. We're going to move into the 1 hour charts, which we're going to break down a little bit further. We're going to see a few more lines, on the screen. And I'm actually going to move this candle back to right here to where pre-market happens, right, which is going to be end of pre-market. Let's actually do like a 5 minute. Let's still move back because now we could see all the price action of what actually happened. So this was what pre-market looked like today. Many of these lines that I have drawn, I made use of the 1 hour chart to draw that. As actually a trick that I picked up from another trader. His name is Somesh. He's the founder and owner of K Capitals. Very good work. Check his work out. Check his work out. But I do vouch by his work. I think he's really, really good. So this was the setup coming into the market today. Keep in mind, we already have our pre-market high. We have that marked, which was at 140.14. Our high of yesterday was 145. We can ignore that high of yesterday for now because price action is way, way, way far from that high of the day. But the low of the day is where it's interesting. We already broke the low of the day during pre-market. We bounced at 136.50, so that is our pre-market low. Now I have these box. Remember that we only trade when we go out of either the high of yesterday or the low of yesterday. Also, in some cases, you have to add pre-market low, as you want to make sure that price trades out of that zone for new price discovery before you take your trade. All right. My first 30 minute, I take it on 2 minute. The next 30 minutes after that, the next hour, I trade it on 5 minute. Then after that, I'm on either the 10 or 15 minute. I did not come up with this myself. That's another trick that I picked up from Somesh, in the way that he trades, and if you are new into trading, you don't want to be touching a 2 minute chart. I'm just going to be honest with you. You want to be looking at things on the 5 minutes or the 15 minutes until, you get better, you get stronger, you have more confidence, and you actually know what you're doing. And at that point, you could play with the 2 minute chart, all you want. You can even do 1 minute. I don't care for it. I don't do it, right? But so if you want to choose to do it, that's up to you. All right. So we're gonna do like a candle by candle analysis. I think market is about to open. We're gonna see what happens right at open, and then I'm gonna explain my reaction to each one of those candles and what those candles mean. That is the way we open. Huge candle, right? The candle that we use in opening. This is at 9:30, and we are looking at, oh my god, I think I have one too many candles. So I'm gonna actually rewind this by one I'm going to change back to that 2 minute chart. So sorry about that. So I'm going to change back to this because we're supposed to be on the 2 minute chart at open. This is the way we opened today, right? This is the 2 minute chart. We opened with a big red. Despite that, the job report that came out, which was a surprise to the upside on the job report, people were expecting a low number to come in. However, the number that came in was quite a big surprise. A lot of things rallied during the pre-market, but there's another psychology to that. Imagine if the market was low yesterday and you bought some calls and then the call opened super big. The first thing you're gonna think about in the morning is to sell those. So this move, I wasn't shocked that we opened with a rejection, to the downside where the market actually dumped. Now, on the second candle, we had an inside candle, which is what we have over here. It is a 2-1 candle. And to me, this is also called a pullback, right? We have a pullback, an inside candle. It is a consolidation candle. And what I was looking to happen next is, all right, we have good volume to the downside. A lot of things were going down. People were taking profits on a lot of names, right? And of course, you try not to trade anything in vacuum. You want to at least have a couple of other stocks that you're looking at, as an indicator. Having a SPY or QQQ on your screen is always a good way to go. And on this third candle, boom, we went down. Yes, it bounced off, but we held down here for a minute or so, and I scaled into my trades. Now, typically my first trade of the day, on the days that I give myself common sense, I try to start with a small position size, like 5 contracts. I try to put my limits to about $1,000, per trade. The market is just starting. You do not know the direction just yet. So if the trade is to go against you, you want to keep your stop loss at minimum. Now, if this is our consolidation, the stop loss on this trade is going to be on the eye of that candle, right? If it goes over that eye, that means it's broken the structure. And I don't think you want to be in that trade waiting for the trade to turn your way, right? So we broke below, and you will see why being careful in terms of position sizing matters. Because for the next 10 candles, which is about for the next 20 minutes, in this trade, we were just trading sideways, right? The pre-market low was quite a strong level. And that's why sometimes not only am I looking for a break below the low of the day, I also want to break out of pre-market low. In this case, I did not wait. I understand the risk. I know what my stop loss is. And in this case, we were risking about $1.29. Right? I'm willing to take that. And that's something that comes with years as you are trading. You get to define what your risk is. And the more you know the stock, for example, if you have about a $1.29 stock on a Tesla, that could be brutal. Or on a Meta, that could be brutal. But on PLTR, I'm okay with that risk. And as you see, we continue going down. We finally broke that level. Now, another thing that you can also do to know where to take your profit, all these lines at the hourly levels, you could take your profit at those levels. Also, you can leverage Fibonacci extension, which you draw from the low to the high of your consolidation candle, which is that one candle that we have over there. So I was looking at taking my first set of profit at 136.02. Think about it. That is close to an old number, which is 136. So that's a good place to take profit. And if you measure it from the entry to that first take profit, that's about 80 cents worth of move. Yes, we didn't get to 1-to-1 ratio just yet, but we're just taking partials, at this point in the trade. We're going to continue moving forward. And boom, we come to our second profit target. We get to that 135.21. I had a small size to start. I think I had about 14 contracts to start. I shaved some off in the first profits target. I shaved some off in the second profits target. And I think I left about 2 runners. And that was really the trade for me. Staying longer, still being in it doesn't really matter for me at that hand. That really was the trade. And this trade, by the end of the execution, it brought about 19% in return, in total return. I know some runners went up to about 50%, but when you look at the total, total package, it was about 19%, which is what we have over here. PLTR, 19% in trading profit. That was easy. We move on. Now, let's go check out the second trade of the day, which was in Microsoft MSFT. Once again, we're gonna go back to the daily chart. We're gonna see, okay, what did we see on the daily? What was the setup? Why did we take this trade, right? And then how did we execute on such trade? Now, if we fix this, let's do our replay. All right, on our replay right over here, let's leave, then let's start the replay over again. Start new. This was the setup in Microsoft coming into today, right? Once again, just like the old market was bouncing. But yesterday is what we call a green to red day. We opened green, then it was failed. You know, in STRAT, you call it a failed two up in terms of the setup, right? We were two up, green, and then it failed. So, of course, if you also use price action, in some cases, they call this the evening star formation, right? You have a green, then you have a failed. Sometimes it's going to be a shooter. It's going to be a shooter. Then we're trying to play the downside to this other side. When we look at this on the 1 hour chart, let me remove some of the things I use in trading today. When we look at these on the 1 hour chart, actually, let's just go to the 5 minutes chart to make it easier, and we can go back to mark right when the market opened, right? So this is what it was looking like on the 5 minutes chart. As you could see, we were running to the upside a little bit. Now for Microsoft, I did not see anything in the first 30 minutes, if I'm right a little bit, right? Like if you look at the 2 minutes chart on Microsoft when the market's open, we're just gonna click through. There were no actionable signals. There was zero actionable signals on Microsoft. So I wasn't taking any trade on Microsoft at the beginning. The trade I took on Microsoft, it came on the 5 minutes chart. So now we are on the 5 minute chart on Microsoft. A couple of things for us to keep in mind. We have our pre-market high at the top. We already broke our pre-market low, right? Keep in mind, don't forget, we tried to trade the breakout. You know, once we break out of either yesterday's low, pre-market low, we look for a pullback. We don't take the first breakout. We don't get paid for that, right? We want to see a pullback. We want to see a consolidation on the price action. That is when we want to get into the said trade. All right, we're going to go candle by candle analysis. As we can see, a big regression. Everything that have been happening in that pre-market, right? All that, market is going up. That got wiped out in the first candle, right? It literally got wiped out in the first candle. Second candle also still bearish. Let's see what happens on the third candle. Still bearish, right? But it's slowing down. You kind of see that it's slowing down. The size of that candle wasn't not as big as the first few candles anymore. It started to slow down, right? And this is the pullback that we were waiting for. I don't have my ORB on this. I'm going to put it on the other videos. You can also see that the ORB low is, so actually I do have it right there. That is the ORB low, which is, we are looking at the opening range of the first 15 minutes. That's another good measurement that you can use in looking at how you get into your trades, right? So we have that consolidation candle. It is green. Yes, some people that have been short all this while, they came in to cover. We don't go in until we break the low of this consolidation. So according to STRAT, that is called a 212 back to the downside. All right, let's see what happens next. Boom, we broke it to the downside, and that's when I got into the trades. And of course, since this is my second trade of the day, the first trade was already positive. I decided to size up, right? As you see, I'm not starting the first trade with a big size. The first trade was about 14 contracts. Typically, I do 5 to 10 contracts. Second trade, I went 20 contracts on this, which was a bigger size compared to the first one. And of course, since this is Microsoft, the contracts are a bit more expensive. So we went there. Once again, we're going to draw our take profit so we can know where we're looking to take profit. Because of the size of this movement, I actually did not take my first profit at the 1.61 level. I just look at the size of the movement. A lot of things were dumping. Qs were dumping. Nvidia was dumping at that time. SPY were dumping. So there was more to the move to the downside, and we got paid for it also. As you can see, it even give an additional move, but I did not do an ad on this trade. I didn't do an ad at all. I have a script that I have written that will let you know how much your risk is, this, that, and the fourth, but I wasn't even paying attention to that. at this point. I already have a big profit. We kept going down. And in this trade brought about 30% in return, right? Which is very good. That's a very sizable amount when it comes to the return on the trade. The most important thing to pay attention to, though, is you have to be patient, right? For any trade that you are taking, if you notice I did not chase the breakout, it's not that, oh my God, the market is going down, let me quickly jump in. Nothing goes down in a straight line. Any trade you have to get into, you must be able to measure your risk. How much am I risking? If this thing is to go against me, where is my stop loss? On this trade over here, our stop loss was right at the eye of that. We never came to touch it. We didn't have to be worried. But going into the trade, we already know how much we're risking, $1.44, right? And that $1.44 ended up paying us, by the end of it, about $4, to the downside. Am I there to capture all the $4? No. Do I need to? No, right? So we know our stop loss. Even if you've decided to add on this 211 to the downside, you know your stop loss. As you could see, my indicator that I have already marked the risk. You are risking $1.07 on it. It lets you know your entry, a breakdown of 406. And boom, we went there. We're trying to use the 50% to measure, all right, is this something that is still trending in the direction of the trades? So those were the two trades I took today. Once again, if you learn anything from this trade, please kindly like, share, and subscribe. If you have any question also, put them in the comments. I will do my best, to answer questions. If you want me to make any certain video to explain any principle, whether it is a STRAT-based principle or price action-based principles, I don't mind to do that. Hey, thank you for watching. Have a wonderful day.